this will go fairly quick. So hopefully you get out of this what you want to. And the idea is that you looking back on my IRS career, which it's been over 10 years since I left the IRS, but it was a fantastic experience. It gave me a bunch of experience as far as what they look for, the procedures, the processes, and specializing in small businesses, knowing exactly how to help people progress. And I did a ton of audits on network marketing, and the IRS targets that. They go after it. And so they'll hit you hard and put you out of business before you even get very far, and it's kind of tough. So you want to protect yourself and be able to progress to where you can make a good income from it instead of losing that right away. Anyway, so and you can raise your hand at any point if you have any questions. What I wanted to get into is we'll talk tonight about the advantages of an S corp. Anytime you have earned income, there's self-employment tax attached to it. If you're an employee, you pay half of self-employment tax. If you're self-employed, you pay the whole amount of it. And so earned income is for that. If you have unearned income or investment income, or what they call passive, then you might want to have an LLC instead of an S corp. But as soon as that becomes earned income and you have self-employment tax attached, then an S corp is immediately recommended. The IRS tends to love wellness advocates or anyone in this type of industry because, generally speaking, someone who's just self-employed or just getting started, you're paying an additional 15.3% to the government. The IRS loves that. So I have a quick video for you, but Caleb walked out.
Is there a play button?
Yeah. He must have already had somebody with a dire question. Yeah.
So an LLC will protect you like an S corp.
Legally it would, but tax-wise it wouldn't.
Was that it?
Yeah, that's it. That's one clip. Will you hit escape on that so it'll go to the next? There we go. So typically you would think that taxes are just straightforward, right? You take X minus Y, so your income minus your expenses, and you come up with your bottom line. And you just pay the tax off of that. The difference is that normally you have your income tax, but when it comes to this, you're tacking on an additional 15%. So whatever your income tax bracket is, just think an additional 15.
Wait, that's what we're doing now if we get a 1099?
Yeah. So you're paying income tax plus self-employment tax at 15%. So when you combine, if you were to look at that, then if you had a 1099 of 50,000 and you had 20,000 expenses on that, then you got 30,000 income. You can have income tax of whatever your bracket is. That depends on your filing status, whether there's another working spouse, the total household income, not the kids, just the two filers or single filer. So whatever income tax bracket you are, plus 15%. So you could have an effective tax rate of 30 to 40. That's not fun. And that could depend also on what state you live in. So it could be even higher than that. That's just your federal tax rate, depending on where you are. So if you're in a 25% bracket and you're paying 15% additional, then you're paying 40%, and it goes up from there. So that's pretty hefty when you think about it. You want to plan smart. The idea is to be proactive instead of being reactive. And I know a lot of times it comes to, I have another clip in here, you'll see it, but it comes to April 15th and you think, I'm going to kick it out. If you have a refund coming, you might do it earlier. But when that comes along, you're like, it's straightforward, I'm just going to kick that out and pay whatever comes along, and you may have no idea leading up till then. You may have set money aside, but you wouldn't have known ahead of time a lot of times what your calculation is going to be to the dollar, what your bottom line is going to be. So it kind of comes as a surprise on April 15th, or you file an extension, and we're dealing with a lot of those extensions still right now, but it hits them and then they go, wait, I don't want to pay that again next year. What do I do right now? I'm going, no. It would have been a year ago that you should have asked me that question for this year, not, you can't ask me about 2015 when we're already in 2016. So, anyway, here's an example, and I don't know if you can see it very well, so I kind of cropped it a little bit differently. But you see on there, there's Homer Simpson and his family. He's got 3 kids, and they've got 50 or 30,000 in income on line 12, which would be a sole proprietor, someone who doesn't have an entity set up. So that 30,000 is there. They've got a little bit of a deduction for half of self-employment tax, and then on the second page, it flows down to their itemized deductions or their standard deduction and their exemptions, and they zero out their income tax, and they still owe $4,590 in self-employment tax. So no income tax, but they're still paying $4,500 in self-employment tax. And that might seem small for 30,000, but in reality, if you had no self-employment tax, you would owe no taxes on that. Yes?
Doing it quarterly?
Well, that's a good question for some people. You can do it quarterly, or you can choose not to do it at all. But it still won't change the fact that you owe $4,500. You could pay it early, but as far as the tax liability goes, it's the same whether you pay it now or you pay it later. It's still the $4,500. I'll show you the difference in that then. So let's say you have an entity then. This is ABC Oils, Inc. It's an S corp. You're down to the 30,000 income. Your income tax bracket is whatever it is, and you have no self-employment tax on it. The difference between an LLC and a sole proprietor, which are in the same category, and an S corp is that the income tax is no different. That never changes, but you have no self-employment tax on an S corp. And the IRS knows that. This isn't a loophole. They're the ones that back in the 50s in the Internal Revenue Code, they set it up and said this is what an S corp is. It's a small business corporation. Over 60% of all S corps are single member S corps. Just somebody just like myself. It's not a big corporation. It doesn't mean, you hear the word corporation, you think this is huge. These are all single member S corps. The other 35 to 40% might have more than that, but there's some regulations to keep it small. So this is for a small business corporation. Yeah. Yes. Yes.
So what I heard you just said, and because I've told people about business entities before, which is going to the state and legally filing and setting yourself up as a legal business. But what I heard you just say is that the IRS created these business entities or the rules in which they operate?
Yes.
Is that so in other words, when you're setting up a business entity, you are now operating the way the law intends you to operate. So there's nothing illegal about it, immoral, or anything like that.
Right. It's just doing it smart, it's doing it correct. They're the ones that came up with it to protect small businesses.
Right. So when I have a tax deduction or I'm minimizing taxes through business entities, this is something that's set up by the tax code itself.
Right. Yep.
You
So
like that?
it's flowing from federal government on down to state, and each state has their own regulations. Over here first, and then.
Is LLC, sole proprietor and S corp the same?
No. So LLC and S corp are different. This is convenient here. Am I okay to do this? Sorry, I should have asked. This is part of working for the IRS or leaving the IRS. It's easier to ask forgiveness than ask permission. Sure. So you have LLC. You also have Schedule C, which any sole proprietor would know that's what they've filed. An LLC with just one member is a sole proprietor still, but they file on Schedule C of the personal tax return. Anytime you have more than one member, so 2 plus, that'd be a 1065 or a partnership.
Is that included if that's your husband?
The IRS regards it the same as if it's just one. I don't know who asked it, but you could file it as a single member or you could file as a partnership. I always file as a partnership. And I'll explain why. And then you have the S corp over here, which files an 1120S for subchapter S of the Internal Revenue Code. So those two are different. Now, I'm not an attorney. There is liability protection involved in those. It's the same. The tax is just a little bit different. So I'll go through some scenarios on that to show, but yes?
Form an S corp, do you have to pay yourself wages?
That's a good question, and I'll get to that one. Sorry, I forgot to come back over here.
Did you define small business, or is it because you're at a certain income level? Like, what's the?
It's the number of shareholders. So 100 shareholders or less. You're not a public entity, not publicly traded or things like that. There's some big businesses that are still under S corp status. Yes.
I'm just wondering if I have my own small business separate from this, if I can claim them together, and if I've had an accountant, if she's already put me at S corp, like, would I know?
You should know. Yes. That might be something you could ask Caleb or Ben too.
Can you repeat the question?
She's wondering if she already has an entity. She's not sure. And that happens a lot. People will come in and they're meeting with me and we start going and then they go, oh, I already have that. And then I get the papers and we find out that it's not completely all the way like an S corp, but there's certain things you have to file to become one.
I missed what you said. I was wondering, did you say that the liability protections are the same for the S and the LLC?
Yeah. I also said I'm not an attorney. But so you can't, but that's true. The liability protection is the same. There's some different aspects to it here and then here.
Okay, I got an S corporation last year, and I did void pay self-employment tax. I had another accountant that said, I won't do an S corporation for you, says, because they are under scrutiny by the IRS, and you're more likely to get audited from it. And what's your comment on that?
Not true.
Not true.
Yeah. Depends on what you're doing. Depends on what you're doing with it, but. Oh, he was wondering, he went to his accountant and he said, I'm not going to do an S corp for you anymore because they're under scrutiny and I don't want you to get audited, so I'm not going to do that anymore. And he wanted to know if that was true, and I said not true. Right here.
I have a mic now for a question.
I know you're not an attorney, so it's kind of two-part, and I'm going to ask you anyway. Can you change your current LLC to an S corp, and then can an S corp also be put into a trust?
That's a good question. I'd refer you to an attorney for the trust part, but yes. And converting it to an S corp, yes. In fact, you can, there's some things you have to go through. We do it quite a bit. Myself, my other partner, we both worked at the IRS, but Ben and Caleb as well, we handle a lot of these. And you can go back up to 3 years if you currently have an entity. If you've been treating it like one, like an S corp, you could go back and make an election up to 3 years back. So with some people, we've been able to do a few things with the wages and run things like it was an S corp and make that election and get some money back for them. Let me move forward real quick. Yeah.
I don't think I need a mic. My question is, at what point do we need to form one? Because I think someone who's just starting maybe doesn't, maybe, but tell me when.
Okay, so that's what I'm going to get to next. I was going to cover some of the costs really quick of doing one. So if you're saving self-employment tax of $4,500, there's some costs that are associated with managing an S corp. And these are our costs. They'd be different anywhere else you go, but we do a lot of them. We customize a lot of stuff. And so we typically charge $65 a month for the payroll. That includes all the 15 filings throughout the year, including W-2s. So everything is done like it's supposed to. And then the tax return is typically $650 plus. If you have complexity like a Rod Richardson, which I was going to joke when I got up here, as far as 1%ers go, I was going to say, well, most 1%ers won't share their tax returns, but we're going to share Rod Richardson's tax returns tonight. We're going to beat Donald Trump to showing ours first. But so this other tax return, I don't think you can see it well enough to even take a picture. But what would happen is on this, with an S corp, you are required to take a reasonable wage. And that's the verbiage that the IRS uses in the code is a reasonable wage. Most anything you do, including your deductions and your write-offs, everything, is that it's got to be reasonable and necessary. And that's the verbiage that they use. That obviously is negligible depending on what you do, and it changes at different levels, and we can talk about that a little bit. But a reasonable wage on $50,000 income would be about $20,000 on that. So in this scenario, what I did was I put, we had that $50,000, right? 20,000 in expenses. So let's say there was 10,000 in wage. We'll go back to that previous 1040 that we just showed, where you had zero income tax, but 4,500 in self-employment tax. On this one, you now are taking a wage. So on line 7, you show $10,000 W-2. You don't have anything on line 12 anymore. That was 30,000 before. You have 20,000 on line 17, so it still equals 30. The difference is the only thing you've paid that tax on is on the 10,000, not on the 30. And you've done that throughout the year on your payroll that you're running. So on that 20,000, you're skipping out on paying the self-employment tax. So the difference would be on the back, if we went down, because it's all taken care of, you'll see that there's zeros all the rest of the way down. Your income tax is now 0 because you fit within those categories. There's nothing on the line for self-employment tax. So that's how you save on it. You're really just transitioning, and this is why it's not a, this is how they set it up. You're trading self-employment tax for payroll tax, and you only pay payroll tax on what you take as a wage. And so you determine your reasonable wage, you pay the payroll tax on that, but not on everything else. Sorry, yeah.
So if you're now taking a wage, are you not eligible to set up, say, a SEP plan, something for retirement?
Yeah, so the question is, if you're now taking a wage, are you not eligible to set up a SEP or a retirement plan? And there are plenty of plans within an S corp that are the same. SEP would be the same, you'd just be going off 10,000 instead of 30. You can go 25% of whatever your wage is. You're also paying less self-employment tax or Social Security tax, so that would make you wouldn't be as eligible for Social Security later, but not by very much. But you'd be saving thousands a year and putting it into a retirement account that you're also getting a benefit for. Yeah.
I have a question over here.
Oh.
I know with S corp or corporations in California, you have to pay an $800.
Minimum franchise tax fee.
Right. What is it in Utah? Anything? 0?
In fact, you have one, Nevada just set one up, and everybody used to flock to Nevada to set them up there. They now have a franchise tax. There's a small one in Texas, but California is the biggest, and it's nasty. So 800 is your minimum. So, yes?
Can you put the salary to both the husband and the wife? And what about employing your children?
So employing children would be different on an S corp. It's allowed on an LLC, but an S corp, no. You can put your wife on there. You can change your owners and things like that. That'd be a more specific one that we could get into later, because I could branch off to so many directions with that. Yes, back here.
Do you have to then pay a salary to each of the members of the S corp?
Technically, no. Depends on what they're doing. So you have your officers. Let's say it's me and I'm the only officer. I'm required to pay myself a reasonable wage. If you have other employees, then of course, yes, you would. You're talking about avoiding the FICA tax for kids, the kiddie tax. That's typically on an LLC for it. It's got to be on a Schedule C or on a 1065 partnership return to avoid that FICA tax. If you're under $600, you're not going to have that really anyway.
Okay.
But you'd be able to go all the way up to $6,400 if you were on an LLC paying your kids that way and avoid that on them. The difference is people do that and then they pocket it, and that's not the same. They get in trouble for that anyway. So you don't see a ton of that. So these are just some of the facts associated with an S corp. It's a small business corporation. An LLC, this should answer a few questions. It may also elect to be treated as an S corp. So you have an S corp filing as an S corp. You can have an LLC filing as an S corp. Either way, you've got to treat it that way. Has everybody been filling out their information sheets? Oh, you don't have any yet? Are we? Okay, he's got it covered. The difference is, and the nice thing is that as opposed to a C corp, which is a bigger corporation and taxed at a higher rate automatically, S corps are not taxed on their profits. It flows down to you personally, to your personal return. So it files a separate return. It files an 1120S, with the government. It's an informational return, except for in California where you pay a franchise tax with it also. So it's informational to them, but not informational to us. But then it flows through to you personally as taxed at your level instead of a corporate level. So you get kind of the best of both worlds with you. You have your personal income tax bracket, and then you also have the breaks of whatever you don't take as a wage, you don't pay self-employment tax on, or the FICA. The hard part is, and where they do get scrutinized, is let's say somebody's making over $100,000 and pays no wage at all, yes, you'll get audited. But if you're making $100,000 and you're paying yourself even a $30,000 or $40,000 wage, you're free and clear. You're doing it right.
So is there a formula, like pay yourself 40% or 30% or?
Typically, from when I'm talking, that's what people will get from it, but there's no exact formula. The idea is the IRS will take your industry average. So let's say you're an accountant and they determine that $40,000 is your average accountant, what he makes, then they would say that's reasonable. But there's plenty of cases that go to court, and tax court always upholds it if somebody's taking a reasonable wage, and it doesn't, it could depend on the levels. So the IRS has lost that one plenty of times as far as trying to go after someone for not taking all their profits as a wage.
Is there a resource to find that information? Like, is there...
He's asking if there's a resource to find that information. It's just listed in the code that a reasonable wage, and they're not allowed to determine it.
No. I mean, if you're saying, okay, I'm going to be waged as a...
Oh, you could just Google it. Yeah.
Right, I think we're gonna have Donald move with this presentation before I...
Where's Rod?
This is not Rod.
Nice, you're moving around.
Right.
I looked for you where you were last.
Just to clarify a couple of things.
Was he on his hands and knees crawling back there? And then like,
I'm looking back. But a lot of people here are at different levels, and some of these conversations are pretty intense.
yeah, it could go over a few people's heads. So everyone's at different levels. The idea is you could talk to Caleb, Ben, or even myself after, or we could do some groups. We don't charge anything for consulting. So even if you just had a question and you take one of our cards from Ben, then you can call us anytime. It's not tax season right now, so we will pick up the phone. But we don't charge any of our clients for consulting either, because usually it puts us on the same page so that when it is our crunch time, it's a benefit to us that we're not now being blindsided with information that we didn't know before. So it's